Hey, yo, dog. Haven't seen you around here much. It's been a while. Well, check it. They call me Chicken Tendies McGee, 6969. Find me on Reddit sometimes. You know, representing the 420. Alfred Winchester III. Pleasure. Pleasure's all mine, Alfie, so let me ask you, we going to the moon or what? What? To the moon. The what? To the moon, hell yeah. Alright, so check it. This is what we're looking at. I got AMC, solid company. Got calls in them, you know what I'm saying? Ring-a-ding-ding, cheddar coming. Like a little bit of risk, do you? Little bit of danger? Have you ever heard of the most dangerous game? Ladies and gentlemen, welcome back to Pandrea Finance. My name is Alex Pandrea. I am a proud short-term trader of low-cap stocks, you know, options and all of that good stuff. I like to try to 10x my money, get those tendies. I like long walks on the beach. Or am I Alex Pandrea, the long-term index fund investor? See you in 20 years, am I right? Anybody? Well, in this video, we're gonna find out what the best way to make money is, take a look at what I do and what you should do in your investment journey. Now, at the end of this video, I will propose a specific plan of action that you can take to effectively and efficiently make money throughout your investing career. So do watch till the end of the video for that piece of information. Now, of course, I am not a financial advisor by any means. I'm just a dude on YouTube who probably has no idea what he's talking about. So please do not make any investment decisions based off of the information in this video. You gotta do your own research. Sound good? Now with that being said, it's time to answer the age-old question, will enough people hit the like button on this video? Now with that being said, it's time to answer the age-old question, trader or investor? Let's begin. The first thing that we have to understand is the difference between being a trader and being an investor, and how each of them make money. And the differences are more specific than you would initially think. Now, breaking it down to its simplest form, an investor looks for long-term investments that will grow and compound over a long period of time, often with low risk, and takes a slow and steady, but based off of history, an effective road to riches. Traders, on the other hand, tend to be more active in their money-making strategies, buying and selling these short-term investments, often doing more research, being more risky. But hey, you know what they say, the more risk you take, the more rocket emojis. So based off of these definitions, we can conclude that there are three key differences between traders and investors: time, analysis, and risk. Okay, so the time frame of a trader is more short-term versus the long-term thinking of a long-term investor. I mean, obvious. Thank you, Alex. Analysis. Now, traders tend to do more research when researching their trades, right? They often use things like technical analysis. They look at charts and pips and those fancy Bollinger Bands, and at times could just care less about the company that they're trading or investing in, because all they're looking at is the price movement and they're trying to squeeze a few bucks out of it. As opposed to the investor, whose research could be based on the fundamental analysis of a company, you know, the balance sheet, the growth prospects of the company, who the CEO is, and sometimes there is no analysis done whatsoever for the company. They just kind of buy, hold, and that's it. Done. Hi, yes, I'll take the very slow index fund for a lifetime, but it's so boring. And the third difference is risk. Simply put, traders take on more risk, and investors just want to hold on to their investments for dear life because this is for their retirement, you know, their future, their non-existing children's college fund. Of course, there's some extra little bonus differences, like the obvious slogans each might have. Slow and steady wins the race, my friends. What am I doing? While traders nowadays might use things like rocket emojis to describe themselves. To the moon! Now, don't get me wrong, there are pros and cons to both being an investor and being a trader. Now, if we look at this handy-dandy notebook, I've written some of these down. The pros of being a trader. It's exciting, and I mean, Lord knows we all need a bit of excitement in our lives. It's educational. You start learning about the markets, the economy, how the world operates. I think overall that's a big plus. You can make a lot of money fast, and of course that comes at a risk, but you can make a tremendous amount of money in a few days, weeks, months, and even years. See, in my mind, short-term trading can still be years, depending on how everybody looks at it. I mean, you could definitely 10x your money with some crazy options play. Insert rocket emojis here. Moving on to the cons of trading. It is stressful. You ever try to hold an option expiring the next day overnight? You don't know about stress. It's addictive. I mean, there is a reason why people compare trading and going out to the casino and gambling your whole life savings away, right? And you can lose all your money. Yeah, that's what it says. You can lose all your money. The high risk nature of trading just means that you have a higher chance to blow up your account and be left with zero. And then you got to start over. Definitely a con. All right, now the pros and cons of being an investor. Compound interest. Albert Einstein said compound interest is the eighth wonder of the world. That's got to be a pro. No hassle. I mean, no stress, no headaches, no racking your brain trying to find the next big thing. You just set it, and forget it. Confident gains. Look, the US stock market has a proven record that if you buy and hold for a long period of time, you will make money. The cons to being an investor. It's boring. It's slow. It's so slow. And chances are you won't 10x your money. Insert opposite of rocket emojis. Now my question to you is, which of these characteristics appeal to you? Which do you see yourself more as? A trader, an investor? And more importantly, which characteristics can you benefit from? Now, I'm going to make a little prediction that you are torn between the two, knowing full well the proven track record of long-term investing and compound interest, but maybe not having the patience for it. You like the excitement of making money off of trades? And you like making that quick profit because you need that money for whatever you need that money for. But deep down, you know you should stop day trading with all that money at least and start putting some of that money away automatically so you don't end up at a certain age broke and looking back saying, Pandrea was right. And hey, look, I know it's not that easy. So you're probably asking yourself, hey, Pandrea, what do you do? And hey, I was in the same boat. See, when I was 15 years old, my mom started a long-term investment account for me and added money in every month. And the idea was that I would continue adding in money when I started earning an income. I would grow that month over month, year over year, let the magic of compound interest do its thing, and I'd be very rich. But of course, when I was 17, I took that money out, liquidated my cash, and I proceeded to go spend it all partying in Europe. Thank you. Well, now that I'm older and I wear a robe around the house sometimes, I like to think I'm a little bit wiser. So I've broken my trader versus investor philosophy as follows. I have a long-term investment portfolio. And when I say long-term, I mean 20 to 30 years from now. Now I'm 33 years old, so you do the math. Now I contribute to this long-term investing account monthly, and it's automatically taken out of my account, so I don't even see it go out. Now the idea of this is to automatically grow and compound your investments using time. Now with this, I don't have to worry or stress or care about what the market is doing. I just let it do its thing and see you in 20 years. Am I right? Still? Nobody? Cool. Now the next thing I do is transfer a percentage of what I make in my business, what I earn, into a separate account, sort of a midterm investing account, where I would invest in individual companies, long-term options, sell covered calls, do spreads, and overall have money for other investments and investment opportunities that might pop up. And the last part is my trading account, my roll the dice riskier investments. Now this account's capital, what I have for trading, is much less than what I have for my more serious longer term safer investments, but it still gives me an outlet to get my trader kick on with it, if you will. So for me, long story short, I am both a trader and investor. Now I know that's not the most exciting answer for you, but this is where it gets interesting. So what should you do? How do you balance trading and investing? The answer to that is going to be based off of a few details: how old you are, what your goals are, where you are in life. Are you married with kids and responsibilities, or you're still single living in your mom's basement? Ma! So generally speaking, here are my thoughts on somebody's best chances for success. Get 2 accounts, one for the trader in you and one for the investor in you. I know you might have to pull it out from you know where. Now these 2 accounts are going to be separate, never mixing the two, and each of them will have different strategies. And the percent that you're going to invest into each is going to differ depending again on those factors that I previously mentioned. If you are 20 years or younger, take most of your income and invest it. At least 50% of what you make. Now, typically at this age, you don't have too many responsibilities, bills, expenses. So I would go, figuratively speaking, all in as wisely as possible still. Keep the minimum cash on hand that you would need for your day-to-day activities. Take that special someone out to the movies every once in a while, and then invest and trade the rest because you have a good head start on everybody else. So I would split the money that you're taking to invest 50-50 into long-term investments. Start putting that cash aside and invest it so it can grow and grow starting from an early age. And then the other 50% I would use in a shorter term trading account and really go for those big winners. See, it's at this age that you can afford to take the most risk possible and really go for those 5x, 10x hits that can really make you a lot of money. Because hey, look, you're young, you have time to make it back in case, the worst happens. But if you make a plan and know what you're doing, I think you'll be okay. If your age is between 20 and 30, and again, these are ballpark figures, you finish college, you get a job, enter the real world, at this point, you can scale up your long-term investments and scale back on your shorter-term trading. I would take 20% of what I earn in my income and I would automatically put it into that long-term account. Again, automatically is the key because you don't even want to see it. It's almost like a tax on yourself, and be as consistent as possible with it. And then what I would do is take 10% of what I make and go for riskier trades that could potentially make more money. Now, at this point in your life, you really can't afford to start losing more than that 10%. So stick to the numbers, stick to the 10%, and don't ease up on the automatic 20% that goes in long term. Keep that consistent and you will thank me one day, I hope. All right, if you're 30 years old, 35 and up, 40, whatever, at this point in your life, hopefully you're earning more money than you were in your early 20s. Maybe at this point you even have passive income from your earlier investments. I mean, we've had 10, 15 years to try to build something, right? Maybe you started a business. So hopefully we're gonna assume that you're making more money. So more money means more chances to invest that, grow it, and overall more chances to make more money. If it were me, I would start taking at least 10% of what I was making and again, automatically into a long-term investment account. You can scale that up to even 20%. And again, this is going to be based off of how much money you actually need to live the life that you want to live, right? Tax yourself, put it away long-term, and then take that extra money, that money that's laying around, that after you go through all your expenses and after you're putting away, saving and investing, you take that extra money and you use that extra money for trading. Now, this is very, very important because you've built something and now you don't want to lose it to some stupid bets. Now, a little bonus tip, if you have a business, and this is something that I do, I take 10 to 20% of each project that I do. When I release a product or I have an event on my website, it typically brings in a lot of cash, and when that cash comes in, automatically first thing that comes out is 10 to 20%, and I put that apart, save it, and invest it. Now, going back to one of my earlier points on one of my first videos, you can click here to watch that. It's very important that you risk time. The time it takes you to make a certain amount of money, for me, it's maybe a month of my business. That's what I figured that I can potentially lose if things go south. So I can take that, a percentage of that, whatever I feel like, and use that for trading. Of course, all of this is relative. You have to put yourself down on paper, put the details of your life, your goals, what you want to achieve, and go from there. But I hope that this gave you a little bit of structure to start with. Now, older than that, you start reaching that sort of midlife goodness, where ideally you want to start living off of your investments. Your long-term investments have had maybe 20 plus years to grow and compound and start paying you that nice monthly income to make up for what maybe you're making now. On top of that, you've had another 20 plus years of trying to go for that 10x investment, of trying to go to double your money or triple your money. And look, there's opportunities all around. And all you gotta do is just look around and those opportunities will pop up sometime during that period. Don't worry if your first few or first 10 or first 20 don't work out, because again, we're only investing a small part that we can afford to lose, right? And I think during your long journey of investing, you will do very well. I believe in you, my friends. So to really make money, I think it's about that perfect combination between compounding your long-term investments, adding to it regularly, along with taking that risk and going for those big scores. Look, long-term investing alone will not make you filthy rich. Now, it can make anybody a few million if you start young enough, and when those opportunities come up, you gotta take them. Doubling your money again, This is how the big bucks are made. And you don't need to risk all your money to do this. It's an important note to keep in mind. You can do it with just the 10% that we spoke about. 10% of what you earn with the right investment can grow to more than you would have in your long-term investment account. And you can do it in a much safer manner than initially one would think. And that is something that we are going to concentrate in future videos on this channel. Now, if you want to see how I did it personally, you can check out this video here, or click this video here to watch my video on option basics. Please don't forget to subscribe because we have a lot more content coming. Thank you so much for watching this video. I really do appreciate it. Have an amazing day, and we will see you on the next video. To the moon!